Well, hello there and good day, subscribers. My name is Mo, and in this video, as part of our dividend stock series here on Momentum Finance channel, we will be taking a look at two undervalued information technology dividend stocks that you can watch or consider to buy in the stock market right now. Without any further ado, let's get into it. All right, the first company to consider is no other than Corning. The company is traded on New York Stock Exchange with ticker symbol GLW, and it is an American multinational technology company that specializes in specialty glass, ceramics, and related materials and technologies, including advanced optics, primarily for industrial and scientific application. The company engages in display technologies, optical communications, environmental technologies, especially materials and life sciences business worldwide, and was founded in 1851 and is headquartered in Corning, New York. As you can see here, the company does pay a dividend, currently yielding 2.40%, which is quite decent and high, especially for information technology sector stocks. Typically for the IT companies, many of them do not pay a dividend, and if they do, the dividend yield is not that high. So that's a very decent dividend yield. The company has a market capitalization of $34.5 billion and is considered to be a large capital company, and has a dividend safety score of 77, considering to be a safe dividend payer. In terms of the volatility, the stock is showing a beta score of 1.24. Beta is a measure of volatility, and companies that have a beta score of more than 1 suggest that they are relatively more volatile compared to the general stock market. Moving on, if you look at the dividend history for Corning, they have been paying an uninterrupted dividend for the past 13 years. And of those years, the past 10 years, they have consecutively increased their dividend. The company pays their dividend on a quarterly basis in the months of March, June, September, and December. And their annual payout currently is sitting at 96 cents dividend per one share. In terms of the valuation, GLW Corning Company's current dividend yield of 2.40 is about in line with their 5-year average of 2.38% dividend yield. This suggests that the stock may be reasonably valued today. GLW's forward price to earnings ratio is showing to be 18.3, which is also about in line with their company's 5-year average of 16.8. The market appears to be valuing the stock similarly to how it has in the past, suggesting that the GLW could be fairly priced if you believe its health and long-term prospects are solid. And if you compare that forward price to earnings ratio to that of the sector for information technology, it is a better price to earnings. It's actually suggests to be less pricey or expensive compared to the sector price to earnings ratio of 21.4. You would also be able to see here the 52-week or 1-year price range for this stock for GLW. The range was between $29.04 to high of $46.25. So the price is hovering around midway with some closeness to the 52-week high price. Moving on, we wanted to also take a look at the stocks in terms of their outstanding shares and their overall sales. We also wanted to take a look at their stock price over the past span of the past 5 years. So you see for Corning, their 5-year return is roughly around 84%. So that's quite a decent return for the past 5 years. If you look at the company's outstanding shares, the company has been, for the most part, steadily buying back its own shares, which is overall a good sign for the investors, because some companies they actually use their excess cash to buy back their own shares, especially at the times that they believe that their shares is undervalued, and that results in increased ownership stake for the shareholders. So that is considered to be a positive sign from our perspective. And on top of that, you notice how the company's overall sales or revenues in $1 billion has been growing for the most part steadily over years, over the past 10 years. And their last 12 months, they were showing to have a total sales of $12.2 billion, which is the highest compared to the past 10 years depicted here on this screen. With that, we're going to also take a look at the analyst estimates in terms of the price targets for Corning. According to tip ranks, there are 6 analysts that are covering this stock. 3 of them have a buy rating and 3 of them have a hold rating. The average estimated price for Corning is at $47.33. And if that remains true, that shows roughly about 18% upside for this stock. And the range, of course, differs. The highest price target by the analyst is at $52, and the lower price target is $40, which is, again, even the lower range is somewhat close to the price that the stock is hovering at around at this time. So that can kind of provide an opportunity if you believe in the long-term potential of this company and want to take advantage of their both upside in terms of stock appreciation as well as their dividend paying and their solid dividend paying history over the past 10 to 13 years that we've noticed they've been paying their dividend uninterrupted. Moving on, the second company that we want to review in the information technology sector, the dividend paying company, is no other than IBM, or International Business Machines. IBM is an American multinational technology company with operations in over 170 countries. The company began in 1911 as the Computing, Tabulating, Recording Company, and it was later on renamed to International Business Machines in 1924. IBM is incorporated in New York and produces and sells computer hardware, middleware, and software, and provides hosting and consulting services in areas ranging from mainframe computers to nanotechnology. Nicknamed as the Big Blue, IBM is one of 30 companies included in the Dow Jones Industrial Average and one of the world's largest employers with over 345,000 employees as of 2020. The dividend yield for IBM is quite decent. In fact, it is sitting currently at 4.71% dividend yield. It is showing also a dividend safety score of 65, considered to be a safe dividend payer. In terms of the volatility, the company is showing, and its stock actually is showing a beta measure of 0.70. That's the score, which is considered to be low volatility. The market capitalization for IBM is at $125 billion, making it a mega cap company. Moving on, if you look at the dividend history for IBM, it has been paying its dividend uninterrupted for past 26 years, of which the past 25 years of them, they have consecutively increased their dividend year after year. IBM does pay their dividend on a quarterly basis in the months of March, June, September, and December. And currently they pay an annual payout for their dividend of $6.56. In terms of the valuation, IBM's current dividend yield of 4.71% is about in line with their 5-year average, which is at 4.49%. This suggests that the stock may be reasonably valued today. However, it is worth noticing that IBM's forward price to earnings ratio of 12.4 is well above its 5-year average of 10.8, indicating that the stock looks somewhat expensive compared to how the market has valued it in recent years. These conflicting situations often arise when the stock price rises significantly faster than its earnings, and you can check their 52-week price range that you have at the bottom right corner of the screen, just to do a little bit more research, as well as looking into some other factors such as the company's sales, how it's changed over time, their profitability, and other data points. And we were going to take a look at that. While sector price to earnings ratio is much higher in terms of being more expensive, we don't want to necessarily fall into the trap of just because IBM has a very low price to earnings ratio, necessarily that means that it's super discounted. It's important for us to also compare that to the company's own current or forward price to earnings ratio over the span of the past 5 years and longer, to just have a better gauge in there as well. We wanted to make a more informed decision, so that's why we took a look at the company's outstanding shares, how it's been changing. We also took a look at their company's overall sales. Of note here was the fact that almost steadily the company has declined. It's showing a declining kind of trend for their total sales. This is not obviously a positive sign. It does suggest that the company is not necessarily doing the best when it comes to maintaining or growing its revenue. In fact, it's declining. Nonetheless, the fact that the company is a solid dividend payer, and it's been able to sustain that dividend payment for the past 26 years, is somewhat of a relief. But we want to also take a look at how the stock price has done over the span of the past 5 years. With the declining sales, it is not surprising that the stock price over the past 5 years has actually gone down. So if you bought the shares of IBM 5 years ago, you would have lost about 14% of your investments. Nonetheless, you're of course collecting that dividend income. So that's something that makes up for, obviously, is part of that loss. In fact, more than that. And again, this is not necessarily a growth play, investing in IBM at this time, given how they're, in the past at least, their revenue has been declining, but it could be a considerable option for you from a lens of a dividend paying stock. Looking at tip ranks and analyst estimate, there are 8 analysts reviewing the stock, which an overall moderate buy rating. 4 analysts have a buy rating, 3 have a hold rating, and 1 analyst has a sell rating. The upside potential based on average target price for IBM is about 9%, because the average target price is at $152.38. The lower range for the price target is at $121, and the higher range is at $175 based on these analysts covering this stock. Well, there you have it, folks. A quick look into 2 undervalued dividend stocks in the information technology sector, and that you could consider to do more research on or add to your watch list. And upon further research, you might consider to buy them or add to your existing shares of these 2 companies. We hope you found this video beneficial and you gained something of value from it. Here on Momentum Finance, we post several videos every week talking about dividend stocks, growth stocks, and financial freedom. And we hope to bring value to our audience interested in financial freedom, as well as investing and growth of their wealth. If any of these topics interest you, please make sure to subscribe to Momentum channel and stay tuned for our future videos. Thank you again for watching this video, and I hope to see you next time.